Well, welcome everybody to 2022. In this video, we're going to do a quick recap of my 2021 recommendations and take a look at their performance versus our baseline. We're going to be looking at the S&P 500 returns versus the recommendations in crypto. And I'm going to give you a preview as well of some simplified trading methodologies that I'm going to start highlighting in 2022 when showing different projects that we're going to be researching. I'm going to be also showing a simplified trading system that's more of a long-term trend trading system that those of you who are not active traders will be able to take advantage of. But then I'll also layer in on top of that some more in-depth technical analysis for those of you that are using shorter time frame or swing trading, trend trading methodologies. But like I said, I wanted to recap my recommendations from 2021 and also give you a little bit of a preview of some recommendations. Be looking for my video out for the 2022 best HODL cryptocurrencies video to come out shortly after this one. But let's do a quick recap here. So for 2021, my large cap recommendations were first Bitcoin, then Ethereum was number 2, Cardano number 3, Chainlink was number 4, Polkadot was number 5, and then we moved into our small caps. So let's start with a recap of those caps. All right, first up, I wanted to highlight, as I mentioned, kind of our benchmark. So if we look at to open the year for 2021, the S&P 500 started around 3,700 and ended the year, it's going to open somewhere around 4,700. So this is a 28% increase. So we're going to measure our returns for hodling these different cryptocurrencies based on this baseline of return. We want to see how much we were able to beat the broad market index by. So we'll start with Bitcoin. Now, as we noted, Bitcoin was a very interesting year for Bitcoin. Nonetheless, we opened the year on Bitcoin around $28,000. And as of the opening of the price action January 1st, the first daily candle printed there, we opened the year at $46,000. So that is a gain of 59.5% on our Bitcoin HODL position, which is roughly double the performance of the broad market index. So as disappointing as some people were in the overall performance of Bitcoin for the year, especially those who were looking for a large blow off top, $400,000 type price toward the end of the year, those people were disappointed. But if you are hodling and you're trying to beat the market in performance, well, you've achieved that just by holding Bitcoin for the entirety of the year. Now, the next recommendation obviously way outperformed Bitcoin for the year. That was Ethereum. Now, shortly after I did that video, I actually upped my Ethereum position size, and we talked about that as we were trading it. Traded a much larger position. But we opened the year on Ethereum at $700 roughly. And then now we've opened 2022 at $3,700. So that's a huge increase of 412%. So definitely significantly beating the market on our Ethereum position. Of course, we're in a crypto bull market, so this is to be expected, but Ethereum honestly performed better overall for a baseline than I would have expected versus Bitcoin. And we'll talk about what that means for 2022. Now, Cardano was another large position that we held. Cardano opened the year about 16 cents, and it opened 2022 at $1.30 roughly. So from 16 cents to $1.30, a 677% gain. And the other great thing about Cardano is most of us were staking Cardano pretty much this whole time and have been for our long-term HODL positions. We've been receiving a 5% or so staking rewards. So this has also been compounding, which has been fantastic. So that's additionally increasing our gains. Now, of course, you could be staking or lending out your Ethereum as well and be compounding that. But the staking on Ethereum is through Ethereum too, of course, which comes with its own caveats. But Cardano staking is pretty straightforward for self-custody and staking. Now, my next recommendation was one of our weaker performers for the year. It's something to take note of. It was a weaker performer for the year, but the charts are setting up, and I'll show this here in the next video that we do. The charts are setting up here pretty well for Chainlink to maybe have a bigger rebound than some of the others, or a bigger price appreciation for this year. But nonetheless, Chainlink opened 2021 at around $11. and then it's opening 2022 at closer to $20. So that still is a pretty reasonable gain for the past year of 75%. Again, still well beating the market. Now, Polkadot, the other large cap recommendation we had there, opened 2021. It's about $7.80. And then it closed 2021, opened 2022 at a price of about $28.58. So again, this one was maybe a little bit disappointing for the gains that we were hoping for in comparison to some of the others. But nonetheless, we put in a 252% gain on this asset for the year. So a quick rundown of those percentages again. Bitcoin is up 59.5% of the open for 2022 versus the open for 2021. Ethereum up 412%. Our biggest gainer was Cardano, coming in at a whopping 677% year-over-year return from the open of 2021 to the open of 2022. And Chainlink, 75%, one of our weaker performers, and Polkadot coming in at 252%. Now, following this up, I had some small cap, micro cap gems, as I called them. So let's see what those gains were. And here were my small cap recommendations. First was Vechain, then Vector Space AI, and then API 3 and Enjin coin. So as a quick recap, Vechain is a play on a blockchain infrastructure for supply chains, which is really impactful in the world that we live in now. Vector Space is an AI company, AI data sets. API 3 is a different way of doing Oracle services, which is what Chainlink is an Oracle service, but using kind of Web3 application interface components. And then Enjin coin is a gaming NFT play. So you can kind of see the major themes that we saw play out through 2021 represented here in supply chains, and obviously what was going on in the world with supply chain logistics, AI data, oracles and Web3, and then NFTs. So these were the kind of the major, I picked specific projects that I thought were going to represent forward-looking, and all of those themes ended up playing out very well for the year. So let's take a look at our returns. So first up here is Vechain, which opened the year roughly around 2 cents per coin, and then it's now opening this 2022 at about 8 cents per coin, or a 350% year-over-year return. Now, obviously, Vechain was one that we saw some huge price action on, and I ended up doing update videos after that. We ended up taking a lot of profit on this, so this ended up being a much larger return if you stuck with us and kept trading our system. We took most of our returns in the 15 to 20 cent range after having open positions at 2 cents. So this ended up being a huge win. And this one was a much bigger winner if you kept trading in and out of it. As you see here, it was a really good opportunity to get back in after the summer sell-off. But all in all, if you were just hodling, as the video recommendation was last year, 357% return. Now the next recommendation was API 3, which again is that Web3 Oracle application interface style of doing Oracle services. Opened 2021 at a price of $1.81. And is opening 2022 at around $4.20. So a gain of 132% on API. Enjin was one of our biggest winners. And that NFT space ended up being a huge win. Ended up being probably the biggest theme of 2021 was the NFT space. And so Enjin being a gaming NFT play was one of the biggest winners of the year. We opened the year at about 11 cents per coin. 2021, and we're opening 2022 at a whopping $2.50 per Enjin coin. That is a gain of 1,887%. But our single biggest winner of the year was VXV. Now, at the time I recorded that video, VXV actually was a price of about 20 cents. And it opened the year close to 40 cents. It was actually in the 30s when it opened 2021. And we're now opening 2022 at about $4.50. Today, it is up to $5.26. But we exited this position largely on the way up here at around $15. So VXV went from an opening price when I actually recorded the video of about 20 cents. and topped out at about $18, which is nearly a 100x return. Biggest performer of the year, but when measured by open price of 2021 to open price of 2022, and is over a 2,000% gain. All right, and a recap of the returns for our small cap HODL positions at the start of 2021. Vechain, we gained 357% on the year. Vector Space AI put in a 2,000+% gain. API 3 was one of our laggards, just like Chainlink, in the same market as Chainlink, lagging at the 132%. And then Enjin coin, again, you can see here the AI space and the NFT space were our largest themes probably of the year. So Enjin coin putting in an 1,887% return. So on average, the returns in these small caps were quite strong, anchored by the returns of VXV and the returns of Enjin coin here. So naturally, the question is going to be, which of these projects do I recommend that we continue to hold for 2022? Which ones should we exit? And we're going to address that in an upcoming video, my recommendations for 2022, because the answer is very complicated because of the dynamics of where we're at in the market and the relationship of altcoins to the smaller coins, small caps, to Bitcoin, and then the large caps as well. So we need to do some analysis about where we're at and the flow of funds from small caps to large caps. I think we're going to see a shift early in 2022 away from small caps back into a few large cap plays, with small caps continuing to outperform where they are strong, where the projects are strong and they have large fundamental themes that the market is very hyped about. To really answer the question, let's go take a look at the charts. And what I want to do is start to show you guys, I'm going to give you a preview. Thank you all of you for have stayed through this video, this recap of last year. I'm going to look at these four projects that we have, or three of these four projects we have pulled up here, along with Bitcoin. And I'm going to give you a preview of my simplified trading system that we're going to start to highlight for this year. As this is especially focused again on people who do not want to be active traders, but they want to know when is a good time to buy their favorite coins, to take a little bit of profit, and then to continue to DCA. So when should they DCA in? When should they take some profits? And when should they return to DCAing back in? And so this is going to be something that we're going to highlight throughout 2022. I'm going to give you another preview here. We're also going to be talking a lot this year as we might experience quite a bit of sideways price action or a small bear market toward the end of the year. Other return generating mechanisms, specifically yield farming. So we're going to have a video coming out here soon about yield farming. What is yield farming? Where are safe places to do yield farming? Those type of things. But these are going to be good strategies we're going to try to take advantage of. If you're not a trader who's actively capable of actively trading sideways markets and scalping ranges and things like that, we're going to look at other ways to get more guaranteed returns on our capital. Okay, jumping over to the Vechain chart, I'm going to give you a preview of a very simple trading strategy that we're going to start to hone in on for 2022 that is specifically geared toward those of you who want to improve your investing in crypto by being able to buy at the right time and sell at the right time, but you do not want to be an active trader. You simply want to be a long-term hodler, a dollar cost average in when it's a good time to dollar cost average in, take some off the table when it's a good time to take some off the table, and then reinvest that back into either one asset or different assets as you see fit. But we're going to start with Vechain here, and what I've done is, you see on the chart, I have just two moving averages. Now I'm going to show you here, if you go on TradingView, now you can do a free TradingView account. I believe you can get a moving average indicator with the free TradingView account, or if you have a paid for account, even better. But if you just go to indicators and strategies, up here at the top, you see there's an indicators and strategies, and you search for moving, you're going to look for the moving average indicator. That's it. It's just the moving average, and that's the simple moving average. When you just look at the MA moving average indicator, it's a simple moving average. And what I do is I anchor the time frame to 1 day. So instead of it following the chart, as you see here on the chart, Let me show you what that looks like. So on the 50-day, if I move to the 4-hour, you see the price of this moving average is going to move around based on the closing price of whatever time frame I'm in. So if I move to the 4-hour or the 1-hour, that line looks totally different because it's plotting the last 50 1-hour candles, or the last 50 4-hour candles, or the last 50 weekly candles. But I want it to always be on the 50-day for me because that's all I trade around, even on these lower time frames. All I care about is keeping it on the daily. So you see here I'm on a 4-hour chart, but I'm going to anchor my moving average to the daily and see it move back up. So if I flip it to the chart again, it's going to follow the chart, but I'm going to move it to the 1 day. Okay. So I'm going to keep it at the 1 day, the 50. We're going to put in the link that's 50. So what this does is it takes the closing price of the last 50 days of this asset and simply plots it. That's it. This is the average price. 10 cents is the average price of Vechain, or closing price of the last 50 days. And I've done the same thing here with the 200-day moving average. So I have same thing, time frame, 1 day, and I selected 200. Okay. So those are the two moving averages we're going to use for this simplified strategy, and that's all you really need. You have a shorter time frame momentum indicator. Our daily indicator, 50 days is going to be our short momentum, and our 200 days is going to be our longer momentum. Okay. So once we have those two lines on here, what we're going to do is we're going to combine a DCA strategy in with a kind of a swing trading strategy. It's really kind of a trend strategy. So what we're going to do is very simply, as long as the 200-day moving average is trending upward, means that if you just look at this line, if the moving average is moving up, we're going to say the asset is an uptrend, right? So all of our rules are based around if the 200-day moving average is going up or coming down. If the 200-day moving average is going up, it's in an uptrend. If the 200-day average is going down, it's in a downtrend. In an uptrend, when the 200-day moving average is trending upward, what we're going to do is we're going to engage our DCA activities, dollar cost average. We're going to dollar cost average anytime this asset's below the 200-day moving average. And then we're going to just save our DCA funds. When it's above, we're going to continue to save it as stable coins or some other long-term asset. And then you're going to buy in anytime whatever asset that you're following, and in this case, if it's Vechain, you're going to deploy those dollar cost average funds in every dip below the 200-day moving average as long as the 200-day is trending upward. So all of these areas are going to be places we're going to DCA in. Now you see here, at this point, the 200-day moving average is now trending downward. So we're going to cancel. We're going to not DCA in anytime it gets below 200-day until that remediates itself. So in this area over here, we are not going to DCA in because the 200-day is moving down, and we're going to wait for this 200-day to reverse and start to head back up. All right, so that's our base DCA strategy. Now, in order to take profit accurately, what we're simply going to do is with whatever DCA funds we have, we're going to watch the 50-day moving average. And you're going to pick a percentage based on how long you want to hold this asset and how active of a trader you want to be. I recommend starting with 20% just to kind of get the feel for the strategy. But you can do 10%, 50%, whatever you want. And so with 20% of my funds, I'm going to actively trend trade this more or less. And so what I'm going to do is, as long as the trend is upward and we're above the 50-day moving average, right? So the 200-day moving average is up. That's our overall trend. When I drop below the 50-day moving average right here, on the daily close below the 50-day moving average, I'm going to sell my 20% position right there on that I should put it like that. On the daily close below the 50. We've lost some momentum here, and we're going to protect our position 20%. And I'm going to wait, and then we're going to do a follow-up video just so you know. There's going to be some more details around this. You can just keep it as simple as a daily close, you sell, daily open, you buy. That's the simplest of all strategies. If the daily close is below the 50-day moving average, you sell it. And if tomorrow opens above, you buy it, right? And so you're going to get whipsawed around a little bit around the 50-day, but overall it will still work out for you as a strategy. But there are some rules. We're going to have some stipulation around that. Look for the follow-up video on this simplified. I did a video about the simplified trading strategy last year as well. You can go review that one. We're going to add some more detail and clarity around how to do this even simpler. But long story short, You've lost the 50-day moving average. So here is where we're going to sell 20% of our Vechain position. And we're not going to add that 20% back until a couple of conditions are met. One, we want the asset to still be in a macro uptrend. So you see here, we have this 20% position that we have. We have this in stablecoin or your base account, maybe it be Ethereum or Bitcoin, right? When it drops below the 200-day moving average over here, our rules are still met for the DCA part of this. So we're going to go ahead and deploy any DCA funds. Any funds that we've had flowing in, you can go ahead and continue to DCA in this area. So you dollar cost average, you put your money in every day here while it's below the 200-day. But you're not going to redeploy this 20% until it retakes the 50-day moving average over here. So we're going to look for a couple of conditions. This would have met all those conditions. So now we're going to buy back. So you would have DCA'd into Vechain originally at roughly a penny per Vechain. You would have sold 20% at 16% or 50% or whatever your percentage is, right? Up to 50, up to 100% really. I recommend starting again somewhere 20% up to 50%, depending on maybe just your feeling about this asset. But nonetheless, we're going to have sold a percentage of it at 16 cents. You're going to DCA back in again around 7 to 5 cents. But you're not going to redeploy that 20% until 8 cents to 9 cents when this retakes the 50-day moving average. And then here again, you're going to take profit on that percentage right around here at 11 cents and also DCA in down here. So your DCA funds that you were holding on to, whatever funds in this area you'd been saving to DCA, they're going to get deployed down here. And then you're going to buy back in. So you'll have sold here, buy back in over here. Okay, so you get the idea. This gives us a way to DCA in when it's smart to DCA in, to just save our funds for a better opportunity to dollar cost average. When I say DCA, I'm talking about dollar cost averaging, by the way. So you can continue to stockpile funds to dollar cost average as assets that you're trading are doing this. But we're going to keep doing this. But now, again, I'm going to remove all this drawing. Now that the 50 to 200 day has started to trend downward, we're going to not DCA in here. And we're going to have our last 20 to 50% position sell. We're going to go ahead and sell that here. Now there's some other stipulations. We can maybe sell a bigger position. When you lose the 50 day and the 200 day is now trending downward, this is where you might want to ramp up the size of the position that you're going to trim. So over here, you might trim only 20%. But here you might go 50 or even 100%. It's totally up to you. Again, I'll have more videos about this in detail. But we're going to suspend DCA. We're going to suspend buying back in. And I said I would probably recommend a 20%, trimming 20% in an uptrend and buying back the 20%. And then maybe a 50% trim in a downtrend is probably what I would recommend. So you still have 50% of your overall funds in on this asset if you're bullish on it long term and you want to keep holding, right? But you're going to hold off on DCAing until the 50-day turns around, the 200-day turns around. Now what's going to happen is that we're going to cross the 50-day here as well, right? So say this was to recover pretty quickly. You're not going to buy above this 50-day because this is still going to be trending downward most likely. It's when price gets up here and starts pulling these moving averages back up, then the next opportunity we have to buy back into the asset is when price drops back below. We're going to continue our DCA activity. But when it crosses below and then back above the 50, and we're going to wait for the 50 to get back above the 200. When all that happens, then we can buy back in that 50% or whatever it was. Again, I'll follow up with a detailed video on this. I just wanted to give you guys a preview, because I had specifically had people asking me, what should I do with my Vechain? So the main thing is using that simplified strategy. The 200-day moving average is now in a downtrend. So this is where we have to be cautious to bearish, right? So now we need to turn bearish on this asset. Let's look at the other assets we have. You see API 3 recently, the 200-day moving average is actually turned back upwards. So the next cross of the 50-day is actually an opportunity to enter a tradable position. Right, so this one's moving. This one's curling back up. So because price action is strong, we can see here it's in a macro uptrend. We can be taking positions on API 3. Enjin is still very strong, trending upward. All those rules apply. DCA in below the 200. You would have sold your position over here. And this would have had been a little bit of a shakeout. You'd have had to buy back here and then sold back over here. So we're going to talk about this. Overall will protect you. You will have some of these losses. There are ways to avoid getting shaken out by false break to the upside over here. But all in all, you would have had a really strong win on this move here, and then a small loss buying and selling right here. Right, it's a part of the game. Small losses, big wins is what we want. Let's look at how this applies to Bitcoin. You see here, Bitcoin is still in a macro uptrend. The 50-day moving average, we did finally, even after the summer sell-off, the really bad summer sell-off, we didn't get a downtrend on the 200-day until this small section over here, which quickly rebounded after this price action. So this rebound now puts us back in an uptrend on the 200-day moving average. So the next time we retake the 50-day moving average is again in this very simplified trading system an opportunity to add back tradable positions to Bitcoin. And this is our main proxy for all of our assets. So there's a very simple preview for you guys of our simplified dollar cost averaging plus trend trading strategy that we're going to be highlighting for 2022. Be on the lookout for the follow-up video of my recommendations for 2022, as well as a more detailed video on the simplified trading system. Thanks again, everybody, for watching. Take care.